Good afternoon and welcome to the end of day market review for February 9th, 2012. My name is Jason Waugh, one of the trainers and success coaches here with Ideal Trading Lifestyle. I'm going to be walking us through today's presentation. Now, before we get started with this presentation, we are going to ask that you give this disclaimer a quick read. Once you're done, we'll go ahead and jump into the agenda. All right. So our agenda today and every weekday is to go through and see what's happening in the marketplace. More specifically, we're just going to take a look at any news that we feel is going to be impacting the U.S. markets. So we're going to be looking at the daily news. We're going to compare it to where the news was at prior to market open and just see if it continued its trend or if it ended up changing its tone. We'll be taking a look at the market outlook. Now, this is going to include analysis on the S&P 500, where we'll be looking for support and resistance levels, as well as identifying the location of the MACD. We'll be taking a look at our volatility indicator, the VIX.X. We use this tool to help us identify how much volatility or fear is in the marketplace. Last time we looked, there wasn't anything on our basic watch list, so we may end up having to fast forward through this, but we'll double check before we end up getting to that part. There was nothing from yesterday that we liked. Now, there were some Ideal Trading Lifestyle picks for our customers on the U.S. markets there, but they are using a slightly different algorithm to come up with this. Right now, with our basic customers, we're really ending up into a very cautious state because we have a couple of things that are going on. We'll get into that as we talk about the news. At any rate, we'll end up finishing by preparing for tomorrow, where we'll take a look at anything that we've discussed and apply it for both our basic and advanced customers. They're going to be trading a little bit differently, and we'll just be able to identify those 2 points there. And then, obviously, if anybody has any questions along the way, all you need to do is send in a message to the chat box or raise your hand. And at the end of the presentation, I will unmute your line so you can ask your question verbally, or if you've got it typed in there, we'll read that question out that way. And then for anybody who's watching this video after the fact, all you need to do is send an email off to training@idealtradinglifestyle.com, and we'll address that question during the next presentation. So with that said, we're going to go ahead and we're going to poke our heads into Yahoo Finance. First off, the morning looked like it was going to be at a little bit of a negative note, and this was because of the concern that was going on with Greece. Now, by the time the day ended, there was a good deal that went on with Greek, and the Wall Street ended up for its third day. These days aren't large. They're not incredibly strong growth, but they are inching themselves up slowly each and every day. And that really is showing that there is some optimism in the marketplace, and it's showing that, yeah, we've had some bad news. It pushed the markets down a little bit, but all in all, the market seemed to be very happy rising. This is good because it gives us the confidence that people are interested in the markets, but it does also point us to a very real reality, and that reality will become quite clear once we take a look at the S&P 500. And this reality is that although we might be focused on this very tight trading range that the S&P 500 is trading within, we need to also identify the fact that it's never been this high in the last 6 months. In fact, the last time that we saw the markets this high was back in June. And really, if we look at the immediate picture and try to back test it to historical data, we really don't have a whole lot to compare it to. And the best thing I can do is bring up the age-old quote, whatever goes up must come down. So we are in that point where the markets are getting to be overbought. We're getting to that point where they just need to pull back, do a little bit of resting, and then work themselves back up again and hopefully make all-time highs all over again. The pullback that we can expect could be on the larger scale, to the supporting line down here. That's about 1320. There was a little bit of support that happened right around here. So that's going to be a very temporary level of support. And then obviously we've got a cycle high from right here that it can pull back to, which seems to line up pretty closely with the rising support level that we have here. So all in all, pretty good. One nice thing, though, is the MACD spent the last 3 days flat. It's now back to rising bullish. So this is a great thing to see here. Moving on to the volatility indicator, we can see that the volatility did increase today. And that's probably just because of the uncertainty that was going on in the marketplace with the question about the Greek bailout. At any rate, it has worked itself up to 18.63, which is a little bit higher than its closing price yesterday of 18.16. Nonetheless, it's below 20, and more importantly, it's well below 30. Yeah, it's when it really gets into the 30 and above that we start to be concerned with the marketplace, though we would end up questioning the markets and starting to exercise more of a conservative approach if we ever see it rising up above 20 and towards 25. But really, we don't need to say, you know what, I don't even know if I want to trade until it's in its 30s. With that said, we are in that overbought state. The volatility is increasing somewhat, so it would be a good idea to exercise that caution and just say, you know what, I'm going to trade smaller shares, or I'm going to go for smaller profit targets. And just to confirm that, if we go ahead and take a look at our basic watch list, there we go. We've got no stocks that are on our list. Now, the customers might be questioning, why is it that if we had a good day today, are there no stocks on that watch list? Well, it comes back to the same reason why we're being cautious with the S&P 500. It's in all-time highs. And one of the things that we look for, which becomes more obvious as an advanced customer, is whether or not a stock is in its 3-month high. We really just don't want to trade anything that says 3-month high because we have nothing to compare it to. And it gets to that point where you've just been playing with fire for too long and you are going to get burnt. So we found that we have a higher success rate when the stocks that we choose and put on the watch list are trading below their 3-month high. That way we have a clear profit target, we have a clear objective, and we can go in and make our trades. So what does this mean for our basic customers? It means that we really are done trading for the week. There's not much else we can do. We'll see what happens tomorrow, and if things look positive tomorrow, we might end up with some stocks on the watch list, but again, we're probably going to be experiencing the same thing. Markets are getting into that overbought state. So the earliest that we'll be trading is Monday. As for the advanced customers, absolutely, you can still go ahead and trade. You just need to make sure that whatever you're trading is conservative and cautious. Don't go for your 3 or 4 or 5%. Go for your 1 or 2%. Don't hold on to your stocks for 5 or 6 days. Hold on to it for a day, 2 days at the most. That way you can get in and you can get out and you don't have to worry if the markets end up deciding to take their turn. Obviously, we're still going to look at opening news and futures prior to executing any of those trades. And really, that's the best we can do. We don't want to end up being scared and choose not to trade, because the S&P 500 might be in an overbought state for a week or 2 weeks or maybe even 3 weeks. It could be up there for any amount of time. And if we just decide not to trade, we are going to miss out on some trading opportunities. So again, go ahead and trade. Just exercise caution. And then obviously we've got our ideal trading lifestyle picks for our US, Canadian, and ETF markets if you want to take advantage of those as well. So with that said, not a whole lot else to discuss with today's markets. Just going to double check and see if we had any questions. Well, everybody seems to be happy. So good. All right, well, as always, this presentation is going to be archived, and it will be posted up onto our website within the next half hour, 45 minutes. Again, if anybody has any questions, send us off an email, and we will address that question again tomorrow. Thank you for attending the end of day market wrap-up for Thursday, February 9th. Ciao for now.